Export-Import Bank of China, led by the bank's chairperson, Chen Huaiyi. President William Ruto indicated that his government will continue to deepen cooperation with China in a spirit of partnership and shared progress. Ruto says the growing presence of Chinese enterprises in the country reflects their confidence in the country's stability, as well as their readiness to expand investments. Meanwhile, Kenya and two Chinese state firms launched the construction of a $1.5 billion highway expansion, marking Beijing's return to major infrastructure development in the East African economy. This is after years of hiatus. For more on this, we joined on the line by Peter Wakaba, business news editor in Nairobi and an economic commentator. A very good afternoon to you. Welcome to Africa in Business.
Thank you very much. Good afternoon.
So perhaps let's start with an understanding of what the primary purpose of the China Exim Bank's visit to Kenya was, and if maybe the visit is part of a broader diplomatic or economic mission in that region. Welcome.
Yeah, so essentially this visit is key because the Chinese government has been working to knit the Silk Road around a financial system. So a new system to essentially get countries to move away from dollar financing of projects and loans and to start working with alternative mechanisms that will essentially start a new trend of global financing away from the Bretton Woods. South Africa has been a part of that. Kenya and other countries under the framework of the G20 and then the and other nations, and essentially the BRICS, so that we then start to find an alternative to dollars. In this particular case, the Chinese Exim Bank has signed a $185 million US concession loan agreement to finance an integrated transport modernization system that is supposed to work across the entire country of Kenya and possibly even in the hinterland if this goes successfully. Now, you will remember that recently Kenya started to work towards converting some of the loans that have been denominated in dollars into Chinese yuan or renminbi, and this is just one further step in this direction. Now, this project is expected to manage traffic. Kenya is known for its chaotic traffic across its various cities, especially because the rule of law, lack of traffic lights, government corruption, policemen on the highways, that sort of thing, interrupting traffic flow and thus slowing it down for investors so that the amount of time taken for goods containers from the port of Mombasa into the African hinterland is significantly impacted to the point where it has become a major point of conversation towards improvement of the Pan-African trade.
Now, we did see Kenya signing a $185 million concessional loan agreement with China Exim Bank in order to finance the ITS project. It is a flagship initiative and it's largely designed to improve traffic coordination. Will this loan to fund the construction of a $1.5 billion highway expansion that was announced earlier today?
Yeah, so this is a very interesting project in that it's taken off 3 other times before and fallen flat on its face, so fallen apart. The first time it was under American financing. Feasibility study was done at the World Bank and the contract given out, but government and Bretton Woods were unable to agree to financing. The second time it was done under French concessional financing, the French Development Bank and associated companies, again fell flat because they did not agree to terms. So in this particular time, government has taken a different approach and gone through the public-private partnership sort of initiative. So it's a privately arranged deal between two different Chinese conglomerates and the government of Kenya that will enable them be able to source financing themselves, about $1 billion US, so to say. The project has been divided into 2 different tranches that then will be delivered by several different companies. And this is interesting because this approach has meant that because government is not taking this loan itself, it can then leave the burden of figuring out the financing aspect, which has been troublesome before, to private entities, which in this case will be backed by the Chinese Exim Bank and large Chinese corporations and banks, essentially the government of China. And then, of course, to operate this over a period of maybe 40 to 50 years and then deliver the project to Kenyans after recouping the cash.
Are there any concerns around debt sustainability? And I ask this given Kenya's current fiscal pressures.
Yes, definitely. And it's the reason that this has been a privately engineered deal. So taking a PIP approach where you have a privately initiated proposal for the roads. The first proposal that was put forward fell apart because they felt that it wasn't done in the correct fashion. Privately arranged deal that had been brought forward by an American organization, and later the French also fell flat because they thought that the terms were a bit exorbitant. In this case, because there is a Chinese government rule that says that the government of China will not guarantee anything above 1 billion shillings for a single project. The project has been cut into two different chunks and given to two different companies, which makes it easier to supervise and essentially meaning that it can now go forward. And because the cash is not going into the debt register, in this case, the financing, it is privately funded. So these companies will take on that debt themselves and make their money back from charging at all. It then does not directly impact Kenya's debt status.
Peter Wakaba, thank you so much for that update regarding this $1.5 billion financing.
Asante sana.
Asante sana. That's Peter Wakaba, business news editor in Nairobi and an economic commentator. He takes us to exactly 4:30 p.m. Central African time. Let's head over now to the markets, where Buntle Hedbush is standing by with your latest market indicators.